Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis update is for Monday, October 4th through Friday, October 8th, 2010. Well, folks, last week we saw a market that basically stayed in a relatively tight range. We saw some gap ups, some gap downs, some reversals from highs to lows, and then some light volume trading to the upside. And you're looking at Friday right now on the intraday SPY 10-minute chart. Now, the key here is this. When you see this chart, this happens to be a great example of what we saw predominantly this week, which again was a gap up many days in a row. The market selling sharply in the first hour of trading on heavy volume, and then light volume coming in, as well as the dollar getting lowered around that same time. So, again, remember what we've been seeing. This is most likely going to be attempted in the coming weeks as well to keep the markets propped up. And remember, POMO is going on, which is a key analysis or technique utilized by the Federal Reserve to keep the markets propped up. Again, they're buying the tips from the banks and again, infusing money into the markets. In addition, they're utilizing the drop of the dollar. And again, think about who controls the dollar. You're talking about the Federal Reserve obviously controlling the dollar, using the dollar to fall so the markets can be propped up. Remember, the markets go inverse to the dollar. So if you see the dollar falling, generally you will see the markets moving higher. All right, now let's take a look here at the larger time frame. If I zoom out a little bit to show you guys the basic all last week, you can see again from where we started right around here. This was a week ago from Friday, and this is where we ended, almost exactly in line. In fact, really maybe if you go back here, folks, you can see that we ended the week slightly lower by about 20 cents or so, but that's about it. I mean, it was a minute trading range. Again, you can see you had some sharp drops, you had some sharp rallies up, you had some nice gap ups, and again, 2 days, Thursday and Friday, saw gap ups. One gap up was bigger than the other, which is kind of interesting as well because we did see a higher high here and then a lower high, secondly, on Friday. That can be looked at as a little bit of a key trend as well. But nonetheless, just keep in mind, look at the trading range. I mean, yeah, you've been down here, you've been up here, but take those outliers out, and the market's been in a very tight range. Now, technically speaking, the market remains on a slight overbought scenario. September, we know that the Dow and the S&P were up huge. S&P was up about 11%. Nasdaq and the Nasdaq 100 were up 15% plus for the month. That's a huge move, but you have been in a consolidation mode trying to figure out which way you're going to go. Now, if you look at Thursday and Friday right here with the big gap ups, it does look like the market was attempting to break out and failing each time. Now, is that a bearish signal? It may be, but again, every time the market reverses like this, when it gets to the base right here and right here, the dollar all of a sudden falls off a cliff and goes like this, and that enables the markets to float sideways to higher the rest of the day. Both Thursday and Friday that did occur, as well as here, right here, that's the same thing that occurred, and even right here. So the dollar doing this type of action has continued to prop the markets up. Now, next week is going to be a key week, folks. We're going to go to the 60-minute here. I want to show you a couple things, but next week is key because you get the unemployment numbers and the non-farm payrolls on Friday. And again, we will be doing a No Hype live broadcast of that event. And again, we do that on the key viewing software where you can actually log in and view our charts as I give play-by-play of that jobs number. So I do encourage you to come join that. It will be fantastic. It's part of the Research Center, and again, we give live broadcasts inclusive of that. If you get the Research Center, you get everything included underneath the Research Center, including nightly videos, daily market reports, hot charts and alerts, live text and email alerts, as well as many other things like the Pro Trader watch list, technical tactic, and rules of the trade. All right, folks, again, this is your 60-minute chart. Please note this longer trend line. This is very important. This trend line you can see is now creating some sort of triangular pattern. This to me tells me you will have a breakout one way or the other. It's either going to be a breakout up here or a breakdown. See how these lines are coming together? You have this sloping trend line connected from here all the way through the lows, and you have this upper level where you've gapped above, but you've never closed above. This is either going to mean one of two things. This week is going to be a pivotal week, folks, and I'm going to tell you that right now. I don't know which way necessarily we're going to go. I think generally we're due for a pullback, but you never know with the propping in the dollar or the dropping in the dollar, propping in the markets. But whichever way this breaks, you will have a significant move. So be aware of that. That's what I'm going to tell you right now, and this will be something to take to the market next week, is that if you close and confirm above this on the daily line, on the daily chart, or if you close and confirm below this line, that will be the direction you're heading. And again, you will have a short-term move in that direction of significant size. Could be as much as 3 to 5%, in my opinion. Although on the upside, I would expect it would be less. On the downside, I could see 3 to 5%. On the upside, maybe only 2% or max 3%. All right, daily chart, we'll quickly look at that. You can see again what you've done. Basically, since the beginning of September, best September in decades, folks. And again, look at that, a massive move up. And then you can see the sideways trading over the last week, week and a half. Really, if you go all the way back here to September 20th, when we had this first pop up, since then, the market has just gone sideways. Take that high pivot, just draw it across, and you can see we're basically right in line, and that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days or 2 weeks. So 2 weeks ago, we were basically at the same level. This is long-term consolidation. The question is it bullish consolidation, or is it a failure of the bullish because you had those 2 gap-up days and the 2 red candles coming down and bringing it down? All right, now a couple other things to look at, folks. Next up, let's go to the dollar chart. This is very important. The dollar has been on a cascade fall, and this is exactly why it's been a prop-up scenario. Here's the 1st of September. This is when the rally started. I'm going to draw a line. Here's the S. You can see the S right down here for the 1st of September. Draw that line right up. Let's continue it right up. You can see right here, folks. Let me draw that as straight as possible. You can see the dollar was right around the highs here. You can see we're going sideways right here. And then since then, look at the dollar. What's the market done? The market's gone like this, vertical. All right, so again, you can see the inverse nature of this easily, very, very easily. I'm not going to go over the levels on the dollar or what's going on with the dollar in the projections because that's Research Center premium material for our members. And again, I can't really divulge that. All right, now let's go over a couple other things. Gold, GLD. GLD is another key look here, folks. And you can see we're hovering right underneath the 129 level. And again, you have to think that gold is short-term extended. But what I've talked about to my members, and you can see extended because if you go all the way back to August, gold's been in a sharp upward range, just keeping a tight band, but all the way straight up here. But the one thing I've said to my members is that it's really hard to short gold on a long-term basis. The reason is because if the Federal Reserve keeps pounding the dollar by infusing money and printing money, the markets will go up. And at the same time, gold probably goes up because they're infusing money, so currencies are getting diluted. Therefore, gold will be the only currency that really isn't being diluted necessarily. They can't make gold necessarily in the laboratory, although they can mine more, but it's going to be harder and harder to find. So that can't be printed like dollars can be printed, or euros, or yen. So that's tough to short it in that respect. But at the same time, it's very tough at this range. It's up so much to go short. I mean, how do you go short when gold, you know what's going on out there? So you can't go short. It's too high to go long at this point. You have to just look for buying pullbacks. Pullbacks on gold should be bought, in my opinion, but you don't want to buy a pullback that's small. It needs to be a larger pullback. So keep that in mind, folks. I think that is a very, very important point. Again, a pullback of, down to here, that's not a buy to me. A pullback down to here or here or here, now you're talking is a long-term buying opportunity. And again, I do have a shorting opportunity on gold if it hits a certain level, but that is for premium members only, Research Center and chat room. All right, so join that for sure. USO last. Now, USO was lagging here. And you can see I have some X's on the charts denoting key levels. And what you can see here is gold was lagging the market. I think I talked about this in last weekend's technical analysis update. But what we are seeing now, folks, is oil catching dramatically up to the markets. Now, again, we talked about how just a week ago, oil was only up 3 to 5%, and the markets were up over 10%. Well, now oil's up much more, and again, it might have its sights set on this area. This will be huge resistance on the chart here, major resistance. This actually could be utilized if it gets there in a few days as a shorting opportunity. Any pullbacks, you'll have support right here. But bottom line is, oil is finally starting to catch up. Again, the weakness in the dollar, it's been shocking to me that it hasn't seen more of a catch-up. All right, is oil short-term extended? Yeah, 3-bar surge. 1, 2, 3. Could it go a little bit higher, get up into this level? Yes. If it got up there, I would consider shorting it. But again, I'll give that signal via the hot charts and alerts if I decide to in the Research Center to my premium members. Now, lastly, what I want to do is just go over a couple little odds and ends here, folks. We're going to go to a couple charts here. Number one, Goldman Sachs. Goldman Sachs has been weak until Friday. Friday, it did see a surge, but we'll see if this continues. It was interesting because you saw a lot of the NASDAQ 100 that have been propped up via the Fed, and at least what the speculation is by the Fed through banks and institutions, but they all pulled back on Friday, seeing a little bit of profit taking, and instead, the Goldman stock, which has been one of the weakest stocks out there, decided to take flight. Same thing with JP Morgan. JP Morgan moving up beautifully here. Look at this. Big pullback while the market was still going up, and now finally got a bounce. So it's going to be interesting to see the leaders. One stock I think is getting overdone, and I do have a level on that to possibly look for a short, is IBM. IBM, folks, one thing you want to pay attention to is 1999 high is approximately at 139. We're at 135 and change here. That could be where this IBM is heading. That will be huge resistance. That's the all-time high from 1999 on IBM. So watch again in case that does decide to get there. This week is going to be a fantastic week. Remember what I just said to you guys earlier in the video. This week, folks, if you take a look at your 60-minute, this is going to tell us that the market will break one way or the other this week. All right, you can mark my words right now. You will have a move one way or the other this week via the markets. All right, again, it should be if it goes down 3 to 5%, I'm thinking, and if it goes up, again, that 3 to 5% won't necessarily happen just this week, but it should start that. And then upside, you could go as high as 116 to 117.50. 117.50 will be significant resistance. All right, folks, have a great day. Remember, jobs report on Friday, no hype live broadcast. Let's make some good money this week. That's what I'm going to be doing via the intraday stock chat and the alerts in the research center. Join now. Take care.